Welcome to the Contrarian Capitalist podcast. I'm delighted to be joined today by Clem Chambers. Clem, how are you doing?
I'm doing great, thank you. And what a time to be a contrarian.
Oh, it really is. Yes, a whole range of subjects that we could possibly talk about. I'm looking at my notes here, looking at bullion. We could be looking at especially platinum, which has caught a lot of people's attention. Actually, that being said, let's start with platinum because that has caught a lot of people's attention. It's been under the radar for so long. Why do you think that is? What's moving in the
It's
background?
easy to explain why platinum's been off the radar. But the first thing you have to understand is every year they mine 3,200 tons of gold. Okay. Every year they mine, get this, 180 tons of platinum. 180. That's I could probably put that in my back pocket apart from it would tear the lining. It's like none, right? None. It's like there's none. 180 tons. Every time I say that, I have to go off to the interwebs and check that number because it's so ridiculous. And
Mm.
palladium is also down there in like 170 tons or 190 tons, like none, right? So at £1,000 an ounce, even if gold was $1,000 an ounce, yeah, it's 3,200 tons of that and 180 tons of platinum. Now, the reason it's in the toilet, and there's a contrarian reason why it's coming out is simply because once upon a time they thought cat converters were great. Cars burnt gas and diesel. You put the platinum in, you blow hot exhaust gases in one end, and out the other end comes a much cleaner gases. And the platinum does the work of being a catalyst. God, I have trouble with that word catalyst, but catalyst. And that's what platinum is all about in chemistry. It's about catalysis, taking one input and another output comes out, and it doesn't actually change it, doesn't react with it, but it makes that happen. So suddenly everyone goes, oh, electric cars, Elon Musk, petrol's going to be banned, no diesel. Yeah. Oh, let's take these cat converters and take the platinum out. Okay. So all those cars that have ever been made with cat converters are all going to be turned into platinum metal. And then what we're going to do? Well, actually, it's a very useful thing is platinum for other chemical processes. But nonetheless, you've got this massive embedded supply and all these hundreds of zillions of cars, and all those cat converters are going to turn into ingots because no one's going to need platinum for cat converters. Okay, so platinum, palladium, which was $4,000 an ounce only 10 minutes ago, well, not that long ago, $900. Yeah, but something important happened, and it goes something like this. Some guy, OpenAI, said, have a look at ChatGPT. And everybody looked at it and went, holy cow. Oh my God. Oh, it's a new world. Oh. And anybody that has a brain that's in government goes, oh, there's no second place in AI. And if we haven't got the most AI, we're going to lose. We're going to be like, we're just not, whoever's got the best AI is going to rule the world. Okay. Now, what is AI? Well, actually, most people started, it's the penny is starting to drop. I've been saying this for about 2 years now. AI is energy. To make AI, you have to burn everything to get the electricity to drive all those computers. There's two parts of it. There's the, hey, ChatGPT, is Clem Chambers an idiot or not? And it'll say, yes, he's an idiot. Okay. That doesn't take too much energy, even though they're building out gigawatts of plants to do that. What takes the real energy is the training. So to train a ChatGPT version 1 or 2 or 3 or 4, that cost $100 million, $100 million in energy to actually just build the network, the neural network that is that ChatGPT. But obviously, to be in an arms race, you've got to make better and better models. You've got to keep running them, make new ones, 1, 2, 3, 4, 4, 0, for all that stuff. And there's no second place. So there's no natural limit on the energy you're going to need to be in first place. And that means US, China, and Europe at least will be trying to be number one, right? So there's not enough energy in all the world because there's no second place and there's no natural limit. In crypto, there's a natural limit, yeah, to the energy you use, and that's enough. That's like, a small African country's worth of energy. But with AI, it's 10x, 100x, 1000x, 10,000x, as much energy as you can make, which is why all of a sudden everybody's building nuclear power plants. Oh, remember nuclear power plants? They'll kill your children. And everyone's going to get cancer and die. Oh, no, 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 shut them all down. Germany says no. All of a sudden, oh, nuclear energy. I think we need some of that. Can we have some nuclear energy now, please? Oh, nuclear energy is good. Oh, yes. Let's put it in our breakfast cereal. That's because it's one of the few ways you're going to power AI. Now, what that also means is they're going to be petrol. They're going to be burning diesel.
Mhm.
They're going to be needing cat converters again. They ain't cancelling internal combustion engine cars anymore. I mean, they've gone and almost said it. Oh, we're going to delay that now to past the point when you're going to be alive. Yeah, because you can't go around and be second place in AI because you haven't got enough energy. And energy, if you take it out of nuclear power to power your Teslas, well, you've not got it for AI, have you? So
Mhm.
you've got to go all the way down to coal and all the way down to the center of the earth for as much energy as you possibly get. And of course, platinum, there it is. If you want to remediate what you're going to do with all that petrol, what you're going to do with all that diesel, what you're going to do with all that heavy fuel, you need platinum, you need palladium. Yeah. So it's going from all the palladium in all those cat converters in all the world, it's going to turn into ingots, into all of a sudden, oh, we need to we need to boil the oceans and we're going to need platinum to actually clean all that pollution that's going to make. Yeah. And that is coming down the pike right now. Right now, that's coming. And of course, it's contrarian to believe that somehow it's not going to be a windmill future. But you saw what happened in Spain.
Okay.
Yeah. And you see that everybody's saying, just say yes to nuclear. And oh, coal. Yes, we like that now. Oh, it's not so bad. Oh, I'm sure we can do remediation on that. Oh, yes, let's switch the coal mines back on again. That's all about AI. But platinum is all about the remediation of pollution. So they only make 180 tons.
I think it's worth pointing that number out as many times as we can. 180 tons mined per year. I mean, that is absolutely nothing. So it's no surprise then with that link between AI, energy, and so forth. This is why platinum is still under the radar. But if you're paying attention to what's going on in the bigger trends, then okay, we're not going to sit here and say it's going to go to the moon. But because of the supply and demand, it's certainly a contrarian way to think. Probably
Well,
work in our favour moving forward.
if the internal combustion engine is not going to go away, then the idea that all the platinum in the world is coming out of cat converters, that's going away. And that's why the price is where it is. Yeah. And when you think that actually, there'll be it doesn't matter if it's in a car or not. What about if it's in a generator? As long as you're burning fuel, as long as you're burning diesel, as long as you're burning petrol, you're going to want a cat converter to make the output less noxious. Now, in addition to that, platinum and palladium are really in that list of what they call strategic and critical minerals. Yeah, they are metals that the world doesn't exist without. And now you have a situation where everybody's going local supply chain. Everybody starts having to think about hoarding strategic and critical metals like they hoard gold. You've got to have a reserve of it because if you're getting oh whoops, Russia's producing it all. Oh whoops, they're not your friend anymore. They've decided to start throwing missiles a bit further than Kiev. Oh whoops, you can't get any rare earth metals anymore because China thinks that you shouldn't have any this week. Yeah, all of a sudden everybody has to start stashing this. Everybody starts having to have a strategic reserve of things. Now, the other thing is these metals are basically a hedge against a falling dollar. And the dollar's way too high. If you look at the long-term chart of, say, the yen or the euro or any other currency for that matter, it's way, way too high. Historically, it's a lot higher than it's ever been. And when you think of what's going on in the US right now, Trump was going to cut the deficit and get rid of it, and now it's going to be bigger because of what he's doing. The
Mhm.
dollar has got to come down. It's going to come down, and half the reason why all these European markets are up is because you want to get out of the dollar, you need to get into another currency, don't you? And you do that by getting into the currency of other countries. And that's why gold's been going up. One of the reasons gold's been going up is because it's a way of escaping a dollar lock, because the actual cost of mining this stuff is not in dollars, it's in local currencies. it's South African rands or it's Russian rubles in a good way. It's not a dollar-based thing. At the moment, it's priced in dollars. But if the dollar goes down, it will go up in dollars. So it's a dollar hedge. And anything that's a dollar hedge is going to go up.
One thing that I really wanted for you to touch upon today, and again, you can argue that this is contrarian thinking as well, is
Well, we hope so.
that, well, that's why we're here, is not a lot of people seem to be looking at the markets and then putting two and two together when it comes to supply chain challenges. And you've written and spoken quite a lot recently about that the next market shock or market challenges could be from all these supply issues. I know you've just highlighted some there. I don't think that's getting enough commentary. So I was wondering if you can dive into that if you can.
Well, I mean, I think it's a very good time to be contrarian if you're prepared to sit there and go, well, the devil's going on. It's obvious, which is the lot of a contrarian. Because the only way you make the big money is that the market is wrong and you're right. That's where you make the big money. And the market is seldomly wrong. So you have to find where it's wrong. And you have to kind of understand why it is wrong. And the reason it's wrong is there's this, in America, this set of pathological beliefs. One, for example, is that America imagines somehow it's the richest, most powerful country in the world. Yeah. Not many Americans realize that China has twice as much cash, i.e., real money, currency, than America. It has literally twice as much money, global money, than America has. Okay. Ooh.
Mhm.
I thought America had the reserve currency. Well, it might do, but there's more dollars worth of yuan times two than are all the dollars in the world. Okay. So if you could be that disconnected from reality, China literally has twice as much money, not just cash, money as America. Okay. And then you look internally into the country and you have Democrats who are all frothing at the mouth like rabid dogs about the situation. And
Mhm.
then you look at the Republicans, they're doing the same thing. They're frothing at the mouth, like lunatics. I was actually sat on a train before this election with the most powerful financier in the world. I was sat next to him by accident, funny enough. And I was talking to these raving Democrats. I said, Biden's obviously senile. You just have to look at him on YouTube 7 years ago, and now you can just hear the difference. And Trump's going to get in because of something very, very simple that governments do not win elections, or parties do not win elections these days. Parties lose them. So the Democrats lost the election, and the Democrats are going to lose this one because they're not going to turn out this time. And all the Republicans are going to turn out. And it's exactly what happened. And this financier turned around and said, no, no, blah, 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 blah. World's most famous financier didn't even know who was going to get elected because they were so pathological. He was is no less still a pathological Democrat.
Mm.
Couldn't see that it could be possible. Well, if you have this massive polarity in thinking, then you're going to get a market that's not pricing correctly because the people who are playing the market are not getting together and making a decent average. They're all going, they're all wrong. No, they're all wrong. So the market is in pieces. It's having a nervous breakdown, and the market is having a nervous breakdown. You can't support high asset prices with the sort of stuff that's coming out of North America right now. But somehow up it is. And it's up there because it's being manipulated by the Treasury mainly. Yeah.
Mhm.
And because of the way that people are shifting out of American bonds. And guess what you do if you want to keep your toes in the dollar, but you don't want it in the bonds? Well, you put it in equities, don't you?
Yeah.
And that sort of thing. Oh, that explains it. It's not sustainable. The underlying engine is what sustains all this. And if you get too far out, disconnected from reality and what is in front of you, it snaps. I mean, that's George Soros's theory of I can't remember what he calls it now, but basically there's a gap between reality and perceived reality, and the bigger it gets, the bigger profit you're going to make when that goes snap back together again. And we're in a very, 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 is it inflexive? I don't know, can't remember his, I mean, it was 25 years ago when I read his book. But that is a situation that's becoming more and more and more of a thing. And you can see it in prices like gold and in various places. You can see these funny little activities. You go, what's going on there? It's the market trying to adjust and not being able to adjust properly. And it will go snap. But if you're a contrarian or you see this clearly, you have clairvoyance, it always appears a lot closer than it actually is. So it will take a long time. So it's best to be not pile in like boots first. Just let it mature. Just let time pass. Just ease into it. And a contrarian, obviously, they're the people that watch your channel. They will have been contrarian and seen it take a long time for them to be proved right. And that has to be always bared in mind. So what you're seeing now, it might take, I mean, it could go tomorrow, or it could take 6 9 months, it could take a year. I mean, when he came out and he said, "Oh, we're going to whack Europe for 50%," market goes, I mean, it goes like that. He says, "Oh, well, we're giving them an extra month and a half." Straight back again. Straight back. He's given them up. It's like, oh, okay, so he's not. The White House does not make statements that have any material effect on the world beyond a short market. They're not actually going to do anything. Well, what impact on the market does it have to have an administration which is not good as for its word, or makes spurious statements that never come to pass? I mean, what does that do to your market? Maybe in the short term, not much, but in the long term, that's pretty drastic. So you've got all these strategic things that are heading gently that way, and all these tactical things that are doing that. But ultimately, if you consider what is the direction of travel, now, if you talk to Republicans in the US, they go, "Oh, he's a genius. We don't know what he's doing, but that's the strategy." Okay, nobody understands what he's doing, but that's the strategy that's going to win. Okay, I don't want to be long that. So that's an example. But why, in the short term, everybody's a believer, almost a cult-like believer on all sides.
Mm-hmm.
A market has a very difficult time to actually have the right price. And I would just say, in the end, instability is what brings about lower asset prices. And I think that is something that's going to be grinding on.
Yeah, I'd agree with that. I think that, say this one day, this happens the next, and as you say, we've seen, spikes up, spikes down. I think a few days in April, it was just completely crazy. But also respect what he's saying from a long-term point of view. And this is why we wanted to go into supply chains, because you could say that the damage has been done already with, we're going to tariff this, we're going to tariff that. People might stop exporting, shipping might dry up, etc. And then that could have significant ramifications on both the consumer and economies moving forward. And I don't think that that's getting enough attention in the mainstream media nowadays.
We're going to get inflation for sure. That is on the cards. Inflation, a weak dollar, and all sorts of conniptions. And that is a trader's dream, but an investor's nightmare. So, I think that is the clear thing. I mean, literally, I'm in precious metals and defense stocks. That's my positioning, and I hate that. I just hate that. I like to have a nicely broadly diversified portfolio of risk, contrarian one. Any good companies that people don't like, I want to own them, and then
Mhm.
when they start to like them again, I'll sell them. So that is my strategy. So I hate just having to be in blooming precious metals. I mean, and defense stocks. Well, I don't want to be the richest person at Armageddon, but nonetheless, I want to be able to get on my private jet and go to Chile before the balloon goes up. So ultimately, a contrarian, this should be a perfect moment for contrarians, because there's going to be a lot of contrarian opportunities here. And in fact, the bounce that we saw after the original conniptions, that's about as contrarian as you can get. Even as a deeply contrarian, I would have never have believed that rally would have done that. It's only the second time in recorded history that markets bounce like that. And in fact, maybe the biggest, sharpest, wildest bounce in stock market history. And you can't predict that. I mean, you can predict it and be lucky, but I can't see, you can put your hand on your heart and say, I predicted that. And I predicted the fall. I was out before the fall. I was writing about the fall. I wouldn't have in a million years expected it to bounce like it did. And, and it doesn't comfort me that it did because the market shouldn't have bounced like it could bounce. It could have taken 6 months to do that, but not like 4 weeks. It's just a sign of great fragility that the market is in this situation right now. And it's very, very difficult to call. But if you were to put your finger down and say the implication of this is, you'd go bad, wouldn't you? You wouldn't go good. So that, the direction of travel, as far as I'm concerned, is bearish. And the key next point is Trump popularity.
Mhm.
If he's going to lose the midterms, or rather the Republicans lose the Senate and they lose the House, then perhaps this will be of limited duration. But if they, win the House and everyone says, "Yeah, you're doing a great job, yay," and they keep the Senate and they keep the House, then there's another 2 years on top of the next year. There's another 3 years of this, and dear oh dear, that would be bad.
Yeah, watch out for the midterms in 2026.
Absolutely key.
In terms of, because I know you've written about this, and I didn't do a long bio for yourself, but I have put one on the Substack post and in the YouTube description. Uh, Cryptocurrencies, Bitcoin, plenty of questions I could ask on that, but I do remember reading that you are still quite bearish, if I'm not mistaken, on Bitcoin, despite recent highs, etc., etc.
Uh, okay, what I would say, Robert, is this, is that what I say should just be, data points, grit to your milling. Yeah. So it's the ideas to consider whether you would agree with them or not, that or
Mhm.
about what I say that people should listen to. Now, I have a habit of being well more right than wrong, although I'm also wrong. But it's things like what I'm about to say about crypto that is that people should listen to. Now, Bitcoin is has a very good use case, which is if you want to escape your country because you're about to get turfed out, if you're an
Mhm.
Afghanistan finance minister, for example, a few years ago, then Bitcoin is perfect for flight. You cannot get out of it. You can't get through an airport with $1 million. Yeah, let alone 50 million, let alone 100 million, let alone 500 million. But Bitcoin, not a problem. Yeah, the moment you've bought it, the moment it's gone, right? So you can say, see you guys, bye. And you can leg it to the airport and they can pat you down as much as you like. It's, it's not on you, is it? But it's gone. So it's flight capital. And it's taken over from gold, although gold in these modern eras has never really been convenient enough for flight capital. But it's great flight capital. Now, gold is a great, well, it's capital of countries fearing war. So
Mhm.
gold is for war, Bitcoin is for flight. Yeah. So if you think that, somebody on either side of the Russian-Ukrainian conflict might want to head to the airport with their money, up it will go. If you think people in Taiwan will suddenly need to put their money into Bitcoin and maybe, head to the airport, up it will go. Where there's a chance or an ongoing worry on any group of people with a lot of money, Bitcoin will be supported by the fact that they will be stashing that because if they think they might have to go to New Zealand or Chile, then Bitcoin will be supported or spiked by that. So if something bad is about to happen, maybe it doesn't, but was about to happen, gold would go up, Bitcoin would go up. Now, if people were only going to be leaving, but there wasn't going to be increasing global conflict, then up Bitcoin would go. And if it happened, it might go a bit more. And then after they land in a few weeks' time, it would come off. Yeah, but if they thought, God, the Chinese are about to invade Taiwan, whoop, up it will go as the Taiwanese buy. Oh no, no, that was just a load of fishermen driving by. Whoop, down it will go. So one of the drivers of Bitcoin is groups of rich people thinking about having to have a bug out bag of money. Okay, and that's a big driver. Yeah, and so is conflict and war. It's a big driver of Bitcoin. Outside of that, yeah,
Mhm.
you would be looking at a bear move because it's done its 4 year up like a rocket, down like a rock. Yeah, and it hasn't come down like a rock yet. So there's still a big potential downside. And if you're a believer, it's a big potential upside. It's going to go to 250, it's going to go to a million, blah, 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 blah. But in reality, if global stress and things like the Pakistani and Indian thing, if that happens, up it goes, down it comes, up it goes, down it comes. If that's going on, there is an upside, but I think the upside is way smaller than the downside. That's my bearish perspective on it. And yes, if Pakistan gets angry at India again, up it will go. And maybe to 120, to 125, maybe to 150. But without that impetus of something really unpleasant happening, I don't think there's much of an upside. And I've said for months and months and months, I thought 115 to 120 was the high, and it hit 1.5 and came off. So I thought maybe that I was just a little bit out there, but it stayed up and it's up at 110. And that for me is it's just toppy. It's just toppy. And I like to buy at the bottom and sell near, or buy near the bottom and sell near the top. And that's what I've done in crypto this time around. So I've done my journey with Bitcoin, and I don't really carry much of it. And the other thing about Bitcoin, which is really quite important right now, is you cannot afford to have much of it for security reasons. Yeah, people are getting hijacked in the street in Paris because they've been seen to have lots of Bitcoin. And I've been saying for a long time now, I simply can't move in scale in Bitcoin because it's not safe. It's not a safe thing to have. You see, you can have 100 million, you can have a billion in equities. No one's going to kidnap you for your shares because they are returnable. Well, what do you mean someone stole his share certificate? Well, cancel that one and give them a new one. But Bitcoin, once it's gone, it's gone. So it has that that if you rob somebody of their Bitcoin, as long as you vanish with it, that's it. It's gone, never to come back. So it makes anybody with more than a noticeable amount of it vulnerable, very, very vulnerable. And I saw that coming a couple of years ago. In fact, a lot longer than that. But the level of criminality of people being robbed reached such a peak a couple of years ago. I thought, no, I just can't move in crypto at scale without having to get a bodyguard. So I'm not going to do it. And that really took the edge off. But for somebody that wants to have 10 grand of crypto as part of a diversified portfolio of risk, there's no reason not to.
Well, especially given the reasons that you just outlined with various tensions going on, I don't, like yourself, I don't see them abating anytime soon. I think, that's just where we're at, I think, at the moment.
It's a prepper's kind of thing, really. If you're a prepper, and there's loads out there, it's quite a good thing as a prepper to have, because it is immediately transferable money that can go anywhere you want to go, and can be sent anywhere you want to send it. So it makes perfect sense from that point of view. But as replacing the US dollar and all the other currencies of the world, I think you have to be smoking some pretty heavy stuff to think that's going to be a thing. But a lot of people do.
It's just always good to get opinions on it. To be honest, is why I enjoy doing this, is to be able to sit back and listen, and to try and improve my understanding of such things as well. Clem, obviously we touched on platinum. I've just touched a bit on Bitcoin there. We can go into gold and silver if you want, but I think that a lot of people cover that ad nauseum. Are there any other things in general that you're looking at the moment? Any other contrarian plays? Anything we haven't spoken about that you would like to speak about?
Well, I mean, I think the world is incredibly difficult to predict right now, and I'm the first person to put my hand up and say, you know, you can't rely on anything anybody says, and that makes it very difficult. Yeah. Um, so if people are confused out there, that's fine. Yeah, really, the thing that everybody has to do is work out their strategy. Now, the first thing that I did when this came down the pike is your housekeep. You just go through all your investments, and if you don't know why you've got it, you get rid of it. Doesn't matter whether you've made a load of money on it or lost a load of money on it, just get rid of it. Anything that you don't have a decent amount of conviction. So you do your housekeeping, and you probably end up with a bit of cash. And then you've got high conviction investments. So that's good. You sit on that. And if you're comfortable, if it doesn't keep you awake at night, hold it. And I, before the market collapsed, went, oh, this is no, 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 no. I hate what I'm hearing. This is very, very bad. And I sold everything. Yeah. And then it crashed and I avoided huge losses. And then it bounced. I was, what? But of course, it's only back to where it was when I sold. So I'm not actually out of pocket. The
Mhm.
only thing I'm doing is kicking myself for not making a huge profit on the way back up again. But I could not predict that. I would not predict that. And well, yeah, I mean, there's a load of people saying, oh, I'll buy the dip. I'm not, I'm contrarian enough not to think about buying the dip. So there we are right now between the devil and the deep blue sea. So my strategy is to buy things that hedge the dollar and buy things that bleed into this never decreasing, ever tightening loop of global tension. And that's defense stocks. And I hate owning them. In fact, the whole world hated owning them up to recently. And European defense stocks are going to be very, very good unless something wonderful happens. And then I don't mind taking a bath if something wonderful happens because I really don't want to be the richest person in the crematorium. And
Mhm.
but that's my positioning. And I think the dollar's coming down because the dollar's way too high. You can see it in, if you take a 30-year chart of the dollar, you go, oh, what's it doing up there? It should be down here. And of course, the reality of the matter is it should be down there. And that's why one of the reasons why you get a trade deficit if your dollar's too strong. That's one of the reasons why you have all these issues is your dollar's too strong. And if you go to Tokyo, you look around Tokyo, you go, well, this is not a poorer place than America. And yet the actual GDP is about 40%. Or US GDP is $89,000 a head
Mhm.
GDP. And in Japan, it's so low, I keep having to check the numbers again. It's a bit like platinum and the other way around. It's like $35,000 to $40,000 per Japanese. Well, wealth of Japanese is not under half of the US. But remember that GDP number is denominated in dollars. So if you were to get the wealth of those countries together, and with Europe, for example, dollars are a lot lower, a lot lower. And of course, it's supported by ridiculously high interest rates. Yeah. Well, they can't drop the high interest rates because otherwise they're not going to buy the US government bonds, are they? So if they drop the interest rates and that nobody buys the bonds, then the Fed has to buy them. It's not allowed to, but it has its ways.
Yeah.
And then it monetizes its bonds and up goes your inflation. So then your bonds come down again, and then you've got to put in, you're in a sticky situation. But the way that it makes sense economically is the dollar has to come down. And actually, currencies do have a lot of room for maneuver. And you can see that in the historical chart of things. And therefore, the dollar is going to come down to align GDP per head between the US and the European zone and Japan, because they should be much closer together. And of course, they can be. All you've got to do is devalue the dollar, which is not that difficult when you think about it. You just have to say,
Mhm.
I think we're going to have 3% interest rates now. And down to goes your dollar. Yeah, and that is what I think you're going to see, and a lot of that is actually rotating around the Fed saying, but inflation, no, 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 there's going to be inflation. Dear, you've done this blooming tariff thing that's going to cause inflation. We can't drop interest rates now. That would be inflationary. Well, but if we don't, ooh, ooh, So there's this discussion between the interest rates in America, the strength of the dollar,
Mhm.
and all this global economic noise that's exploded. But ultimately, and probably not into the distant future, the dollar's got to come down. And the dollar will come down because interest rates will come down. And the dollar will come down, and then the interest rates will be able to follow. You see, and you could see that the American administration would be going, "Come on, get the interest rates down." But if we do that, the dollar will fall. Well, that's not so bad, is it? Oh, but then they won't buy the bonds. But you can buy the bonds, can't you? Well, yeah, we can. Well, go on then. Oh no, but we don't want to. It's not really allowable. But you did last time, right? You did during COVID. Yeah, yeah, we did, but we didn't tell anybody. But you can do it again, can't you? Like you did in 2008 and 9 and 10. Well, oh, yeah, we can. And we can do QE, can't we? No, no, but we just spent 3 years trying to. pay our balance sheet down. Are you going to make us do it that way again? Yes. Oh no. Oh, all right. Yeah. Yeah. So you're going to get QE and you're going to
Mhm.
get falling dollar.
Which I think goes hand in hand with everything you explained at the start. With if that all happened, well, that's why we've seen some challenges in the US markets, and that's why the European markets are doing a bit better because that dollar's going down, possibly a bit of capital flight as well. And your playbook at the moment, precious
A
metals,
lot of capital
defense
flight.
stocks.
A lot of
Mhm,
capital flight. You see, the Chinese. I mean, it was funny. I was talking to this German economist, and he said, "Oh, the real risk is China selling treasury bonds." And I said, "Well, they're all gone, aren't they?" He said, "Well, no, they're not. They're there." I said, "No, they're not. They're gone." He said, "Well, they're not gone. They're there." I said, "Well, do you think they're just going to sell them like that? Do you?" Well, what do you mean? He said, "Well, look, if I'm an investment banker, I'm going to hedge them, aren't I? I'm going to swap them. I'm going to say, look, I've still got them, but they're gone." Yeah, because I've swapped them. I said, I've got
mhm,
them here, but I've done a nice derivative with some banks over there, and they own them now, and I got all this other stuff, and I sold that. It just looks like I still got them. But actually, since I said that, the treasury bonds in China have gone from 1.2 trillion to 800 billion. So they've actually sold a third of them officially. But if you don't think that they can just go, oh, hello, investment bank, please can you just hedge our US treasuries for us, please? Of course they can. So a lot of what's been going on, if I've got treasury bonds, I
mhm.
go, well, we need to get out of treasury bonds because that's, oh no, don't like that. And I need to get out of the US dollar. What's the first thing to do? Well, first of all, get out of the treasury bonds and then get out of the dollars, right? So, then you get all your long-term bonds going up. You've got cash. Well, I don't really want to sit it here in cash. Can I just stick it in stocks? Yeah, stick it in stocks. Up goes your stock market, and then pull some of that out and put it in Europe, and pull some of that and put it in the UK, and pull that somewhere and put it somewhere else. Yeah. So you get this, well, it's hedging, right?
Mhm.
And arbitrage and all that stuff. But effectively, it's like, yeah, I think dollars got too high. Oh, can you? Ooh. And we got a lot to move here, guys. Can you start shoveling? So I think you've seen that as well, and that is ongoing now, which is why all these bonds, long-term bonds, are going wild. I mean, remember when the Japanese put up their interest rates, that blew up the US stock market.
Mhm.
Yeah. So, you see how that works, or rather, you don't see how it works, but you go, oh, they put up the interest rates in Japan and the American stock market collapsed. Oh, how did they solve that then? Well, I mean, the American Fed just rang up the Japanese and said, "Hey, we can help you out here. Have some money. Look after, we'll lend you some money to sort that out." And they did, and up it went again. So all these interlinked international balances are big drivers of the market. So forget that, Elon Musk scratched his nose on Wednesday. It's about central banks pulling levers of liquidity. It's about money flows and about these vast sums that are tied up in things like bonds. Bonds are the senior market.
Mhm.
Bonds dwarf in power the equity markets in reality. So when those things start moving, you've got to really watch them closely and go, oh, what does that mean? What does that mean? Oh, it means that equities are going to go down. Oh no, they've gone up. What happened there? So, it's all about this incredibly crazily complicated clock thing that we all that is the market. So a contrarian is in a good shape because he can think thoughts that other people aren't allowed to think. Because the other people they read a book on economics that's 50 years out of date and say, oh no, you can't do this. Oh, unorthodox monetary policy. You heard that one? That's not unorthodox at all. That is the orthodox now.
Times are definitely changing. We're living in interesting times, to say the least. Is there anything else on? Is there anything else on your radar that we haven't spoken about that, again, you think people should be made aware of at the moment?
Well, I think the key thing to investing is to have conviction in it. And if you've got conviction because you actually dug deeply into why, then you'll be fine. If you've got conviction because your next door neighbor said it and he made money, you're in a world of hurt because you really, really have to know what you're doing in this market. And you have to bear in mind that things could go sideways pretty easily. And keep doing it, keep going sideways. And there are so-called national teams at work here. And how sustainable that is, I don't know. I think it's probably pretty sustainable, but it is going to be wild, and you've got to watch out for this wildness. And I don't know. I think it's a very, very, very interesting time, and I think it's a time to be quite risk off. And there will be a time to be very risk on, but I think now is the time to be risk off because you can just see the ability for the market to whip around and tear your face off. And really, investment, it's the old story of there's old pilots and bold pilots, but no old bold pilots. And it's the same with investors. There's old investors and bold investors, but over the next year or so, at the end of it, there won't be many old bold investors.
Oh, Clem, I think that's a fantastic summary and a great place to finish the podcast. I always like to give people the opportunity to explain how they can be contacted or found. So if you've got any social media
Well,
channels, that please do
I,
share.
I I'm very weird. You can find my email address all over the internet. And if you want to email me, by all means, but don't be unkind. And oh dear, I've encouraged people to be unkind now. And I write a lot on Forbes. I write a fair bit on Seeking Alpha. I've got a load of ancient investment books that I've written. I'm starting a new financial website called A New FN, which if you go to and you want to put yourself on the guest list, you'll be the first invites of the first test group, which will be sometime in the next 2 or 3 months. And an UFN is really my big project because we're trying to do something new and exciting in financial information. Because if you look at all the websites that are out there, they're like 25 years old,
Mm.
and we're going to try to do something a little bit more spicy and sparkly than stuff that was kind of introduced in 2000. So if you want to come along and get a ringside seat and an early entrance to that, then please just come along to a new FN and just put your email down and when things are happening, you'll get an email from us.
Fantastic. Well, everything that you mentioned, I'll do my best to put all of that into the show notes that come with this podcast and on YouTube as well. Clem, I learned a lot from that. I think it was a fantastic summary. Thank you for your time. Look forward to catching up in the future.
Okay, great. See you soon.